history is repeating itself just like last year with the Fed rate cuts in December. And in this video, I want to talk about the possible effects of the rate cut on all the products. And there's currently an 80% odds for a rate cut and a possible ES correction on December 10th if the Fed end up not cutting rates like last year. So it's pretty similar to what has happened a year ago, and we'll dive into it right now. So gold and silver, currently the trend is not clear. It's possibly a continuation of the uptrend. As we know, gold and silver are pretty bullish when there's a possible rate cut. So there are a critical reason for our price to increase and decrease. It all depends on the rate cut in December, if it's going to happen or not going to happen. And like we said, currently there's an 80% chance of a rate cut on December 10th. However, in 2024, there was a similar situation and there was no rate cut and the market just completely crashed and gold crashed with it. So this is why I just want to wait and see what will happen on December 10th. If they end up cutting rates, that's great. We can open some positions. If they don't, at least we have some clarity and we avoided some volatility that is clearly could have been pretty bad for us. Now for copper, it's a somewhat of a side trend. The price is on the upper limit of a side trend. Volatility is low, and the critical reason for the price to increase is, again, rate cuts. They are pretty bullish for all metals, and copper is a metal, obviously. And there's also multiple mine disruptions, so the supply is expected to be more tight, and therefore price has a reason to go up, basically. And the price can also go down if there will be no rate cut, which is kind of in the headlines of most futures options and specifically the metals. So the news are critical, and I don't want to have any positions open up until December 10th, which we can maybe possibly open some positions. Now, crude oil is still in a very, very big side trend. Volatility is low though, and the critical reason for the price to increase is, again, rate cuts. Rate cuts are also bullish for crude oil. It basically means that the economy will be stimulated and will be more demand for energy, which is crude oil. Now, there is a critical reason for the price to decrease. It's ample global supply, a December rate cut not happening, basically, and a Russia-Ukraine peace deal, which might increase the total supply of crude oil in the market because sanctions will be taken off of Russia, and we just might have more competition globally and just an ample global supply. So the news are pretty critical, and there's no clear direction currently. Too much uncertainty for me, so I don't want to open any positions in this situation, at least for now. Now we have wheat, and it's possibly in a consolidation. Volatility is low, and the critical reason for our price to increase or decrease is basically, is China going to buy US wheat or they won't buy? And now it wasn't clear that China did they report or did they not report that they will actually buy US wheat, but it's been in the headlines here and there, so I've decided to put it on. And of course, for the critical reason for the price to decrease, we have the ample global supply narrative that's been going on for quite a few months, and obviously Russia-Ukraine peace deal. Russia and Ukraine, they account for 30% of the wheat that is being exported to the world. So you can imagine it can lower the price because supply will be much even more ample than it is right now. So news are critical, and there's no clear opportunity. Now, obviously, volatility is low, so there's really nothing else to be looking at unless volatility is actually a little bit better. Now, last but not least, we have soybean futures. It's a clear uptrend. Volatility is actually low. It dropped significantly, and the critical reason for our price to increase is China has to buy way more soybean by the end of the year. So they agreed to buy 12 million. I think it was 12 million tons or bushels of US soybean by the end of the year, and they only bought maybe 1.5 million currently. So the market is pricing in China buying this massive amount of quantity. So far, they haven't been able to do so, which is quite similar to what happened 2016, 2017. Same situation with the US and and China. And when Trump took office, it was the same kind of scenario, and China ended up just kind of buying normal quantities of soybean, and price crashed down. So news are critical. I think the price will crash down. I think China will not be buying as much as they promised. It's usually kind of the case, but at the same time, who knows, right? So I don't want to be I don't want to place any gambles based on what China might or might not do. It's better for me to just wait for something to happen to be more clear before I open a position. Now, with that, let's look at what happened with the ES futures on December 18th, 2024, which is when the previous kind of similar situation has happened at the end of the previous year. We're looking at the current graph, the daily graph for ES futures. So currently we have an expectation of a rate cut on Wednesday, December 10th. And by then, I do expect the market to basically create a new all-time highs. So very similar to what has happened in December of 2024. Market is kind of kept going up and up and up. And there was, I think, an over 75% odds for a rate cut, which right now I think they're over 80%. So it's even stronger than what happened a year ago. And we had an all-time high, even though there's a contract change here. The market was close to all-time highs. And then December 18th, Wednesday, when they announced there will be no rate cuts for December at least, market just completely crashed, even though they did announce that they are looking for a possibility of multiple rate cuts in 2025, which is what happened. Market really did not like that there was no rate cut in December, because everyone was pricing in, anticipating a rate cut, and market crashed. And rate cuts, they influence basically everything. Like basically most things are affected by the Fed's rate cuts. Metals, crude oil, energy, soybeans and wheat are not that affected, but at the same time, when volatility goes up, correlations also go up. So who knows what's going to happen? It's just not a smart risk to take currently to open any position that has any remote correlation to what might happen on December 10th, right? Which is when the Feds might or might not announce. Now, given that the Feds don't really have the economic data for October due to the government shutdown, this just adds more uncertainty of the rate cut. Even though the market is pricing in a massive rate cut, I think there's also a big possibility of a rate cut not happening, and then everything will just crash. People will feel a lot of pain. So this is my kind of saved and sorry approach, especially with things like that. You have to feel the market, you have to kind of understand what's going on. And hey, they might just gonna come out on December 10th and cut the rates and everything will be fine. It's also a possibility, and if it is, then it's great. Either way, there will be some kind of certainty going forward, and it will be much easier to open positions than it is now, because you don't know what's going to happen. And trying to guess is just it's not going to be any form of trading in this business. It will be pure gambling. So see what's going to happen. Hopefully this video was useful to you guys. I'm going to make a new video in a few days about a new system I've been working on for buying stocks and kind of making money on them. So it's been very profitable. So stick to that. The video should drop 2 days after this video. So thank you again, and I will catch you in the next one.